Hey, what's up guys? In this video, I'm going to go over my October month of trading and my September month of trading. I'm gonna show you guys my journal. What you see right now is some data that I pulled out of my journal, and I think this video is gonna be really good because it's gonna highlight the importance of journaling. It's gonna highlight the importance of just kind of zooming out on your trading. It's going to highlight the importance of trade management and risk mitigation techniques. So let's get into it. This right here, we have these two. This is my September trading, and this is my October trading. And let me start off by saying there are a few trades in here that was not documented on the YouTube channel. I'm going to make sure that going into next month, everything that I journal, they're not documented because when I started the YouTube channel, I had this weird overlap where I was kind of still trading on my other accounts and I was logging those in my journal. And then I realized I should probably just stick to the YouTube channel. That way I don't run into what's happening right now when I want to pull data. So moving forward, I will mainly just be focusing on this YouTube channel, and I'll make sure that when I show you guys my journal and the data in the future, there's no other trades mixed in with that. Anything you see highlighted are trades that aren't highlighted on the YouTube channel, and you'll see that there's a little bit of a discrepancy when I get over to this price graph over here. There's a little bit of a discrepancy because we have these trades sprinkled in. It doesn't look too good on my part that all the trades that aren't on the channel are wins, but you'll also see a little bit of a discrepancy in the monthly P&Ls. So you can see October was a really good month. Well, it was a normal month. It was better than September. But if you look, it is greatly better than September. And if we are talking in the context of our YouTube channel where we started the account at 150,000, we should be positive, but we're not positive on the account just because I was taking trades on my separate accounts that, as again, are here in the yellow. But for the purpose of this video, I am including them in the monthly P&L because these are my monthly P&Ls. And I think the story that they tell has a lot of information in it. But when in terms of this chart and the YouTube channel, all these numbers were copy and pasted directly out of TradingView. So these numbers do not include the numbers that I took. These numbers do not include the trades on the other accounts. So you will see, I don't know, I doubt anybody's actually going to care enough to dig into the math behind all of this, but the math will not add up. But I promise, moving forward, the math will add up, and I'm going to stick to solely trading the YouTube channel account and fully separating my other trading. Okay, so let's get into the specifics. You can see here my monthly P&L versus September. Now, over here, you can see my win and loss rate. So in September, we have days, trades, we have win rate of 45, 41. And look how better October is. October is a whole lot better. And digging deeper into these months, so this is September, this is October. Digging deeper into these months, you can see this is where the YouTube channel started right here. And we started off strong, and then right here, I went on a little bit of a losing streak, and this whole losing streak is documented on the channel, but you can see that we had some pretty big loss days. We had 400, which isn't too bad, but then we had this 990, and then we had another 955. And in relation to the account size we're trading the 150, that's not a big loss if you're breaking everything down into percentages. But in terms of what we're shooting for P&L per trade on this channel. I'm not really basing it off of the account size. I'm basing it off of kind of more realistic, like 5 handles. If you've been following us, I've been trying to preach the 5 handle. Always take your low hanging fruit. But you'll notice that our wins for October were a lot smaller because it was a lot of more base hits. We have 250, 250, 250, 250, 212, 212, 250, 250. And our losses are a little bit bigger in September. And what I think this really highlights is you can see a lot more red in September. You can see a lot more green. And I personally believe that this losing streak, this was, when we started the account, the YouTube channel, this is my first time live streaming my trades, and I kind of started to get let that get to my head. I started focusing on like just trading because I knew people were watching me versus actually trading because there's a setup. If you'll notice, a lot of my videos, I'm just silent, not doing anything. There's a lot of videos where I don't even take a trade, and I kind of forgot that that's how I traded when we started this YouTube channel. And when the YouTube channel started kicking in, I started forcing a lot of things. And what I did was I took a step back. I took some days off, and when we returned to October, I tried to recalibrate my mindset back to what I believe my normal trading habits are, and it really panned out. As you can see, October was a lot better than September. Our win rate in October was 80%. Another thing that you can see demonstrated in October is, depending on how closely you follow ICT, something that ICT says is if you are losing, to cut your position size in half. And you can see some of these trades. So looking into September, you can see we had this 685 day, 485 on the trade. We had some bigger trading days because I was trading with 2 contracts. And what happened was we got into this losing streak. And so what happened was we got into the losing streak trading with 2 contracts, and we had some bigger losing trades, as you can see throughout these days. And what I did was, when I tried to pull myself out of that losing streak, was right at the end of September, I was like, okay, I'm going to size down and I need to focus on consistency. And that really paid off in October. I'm really proud. I mean, 80% win rate is awesome. And to be honest, you don't even need that high of a win rate to be successful in trading. If the people that you are trying to get trading information get really caught up on win rate, let me rephrase that. Good traders know not to get too caught up on win rate, because you can be a profitable trader with a 50-50 win rate. You can be a profitable trader with a 45-41 win rate. But for the purpose of this channel, and for me kind of projecting points I want to point back on in the future, projecting in the future, things I want to point back on and talk about, this is going to be very relevant. Specifically, I'm going to talk, when I talk about scaling and using more contracts, this is something that's going to be important, because you want to be able, and then this kind of highlights the importance of journaling. You want to be able to see this and see a month like this when you start scaling into more contracts. And that's important because say you aren't consistent with how many contracts you use. Sometimes you use 3, sometimes you use 2, sometimes you use 1. If you're not consistent with that number, it's going to really mess with your RR ratio. And I don't talk about risk to reward ratio too much on this channel, because especially, being a student of ICT and smart money, ICT, he doesn't focus on risk to reward too much. It's kind of in the background, but I'm not going to base everything off risk to reward. But when it comes to scaling up in contracts, you need to make sure that you have an understanding of what a normal trading week and a normal trading month looks like for you, because what you don't want to happen is you don't want to say on the trade that you decide to use 3 contracts, that's a losing trade. And then you're afraid. So next time you use 1 contract, but that 1 contract is a win. But because you used a different lot size or different amount of contracts, now that win doesn't make up for that loss when you used 3 contracts. And if you don't know what your hit rate looks like, then when you use 3 contracts, you won't have the confidence to say, I can keep using 3 contracts. Because say you use 3 contracts and you take a loss, and then you use 3 contracts and you take another loss. Well, if you don't know what a normal hit rate looks like for you, then you might get shaken out of using that 3 contracts so that's one of the importances of journaling, is knowing what a normal trading month looks like for you. And it's important to kind of track your progress, because, it's really easy when you get in a losing streak like this to kind of feel down. It's easy to, feel like, shit, maybe I'm not as good at this as I thought I am. And, when you take this many losses in a row, if you don't journal and you can't zoom out, and you don't track your progress, it's hard to come back mentally. And, it doesn't always have to be in the terms of P&L. It could be win rate. It could be I took less trades. So if you notice, I took way more trades each day in September than I did in October. And it also, journaling like this lets you look at your habits. So let's look at these big loss days. There are days where I traded. Look, I took 1, 2, 3, 4, 5, 6. 6 trades that day. I took 1, 2, 3, 4. 4 trades that day. And in my rules, if you watched the rules video on this channel, my rules are I can only take 3 trades a day. And that's assuming that 2 of them were already wins. I can only take 2 losses a day, technically. So you can, just by saying that out loud, these days wouldn't have been as big of red days if I listened to my rules. I didn't listen to my rules. So that's why these are big loss days. The monthly P&L, if I listened to my rules, wouldn't have been so much. The YouTube channel, maybe we would have been back above break even if I had only stuck to 3 trades a day. Because, then you can zoom out, because we would have gone through September, the whole month, without as big of a loss. And then when we rallied, our rallying would have resulted in a bigger P&L difference. And this down here is this data. I just copy and pasted it and brought it up here so we could see it side by side. But yeah, so again, one of the reasons it's important to journal is so you can zoom out and see your progress and see what your trading habits look like, and see, so your progress, your trading habits, and how you can fine tune those for profitability, because that's, what we're trying to get to. That's what you should always be striving for. And you're going to have down months too. You're going to have down months. Like I said this in another video, just like, I think it's easy for most people to understand that you can't win every day as a trader. You're going to lose certain days. And the longer you trade, the more you realize, it's also it's not realistic to win every week. You're going to have losing weeks. And just like you have losing weeks, you have losing months once you do this long enough. And as you get better at risk management and risk mitigation, you'll have less and less losing months. And eventually you can get it to the point where your losing months will be like break-even months, or you'll lose just a little bit. And that's why I've also said a lot before, trading isn't about how much you can win or how often you can win. It's really just about staying alive, because it's easy. Like, there's always going to be setups where it's obvious, or there's going to be days, there's going to be a lot of times where you get lucky. You're going to have obvious setups, and it's not hard to win. What's hard is not letting your losses get the best of you. And yes, so like this, luckily, so again, in this trading channel, we're sticking to the prop firm rules. So when we drew down, we actually didn't get below 4,700. I said in this YouTube channel we were going to be following the Top Step rules, just because we ended up starting out with a 150 account, and Top Step is the only prop firm, I believe, that does a 150, so we're kind of stuck to their rules. Now, I think once we pass their challenge, hypothetically, in this demo account, again, we will be moving to, I will be trading live a prop firm account and past that, but I don't think we'll use Top Step. But for the sake of this demo, we're going to follow the Top Step rules. I think you can have like $4,500 worth of drawdown, so we didn't come close. But again, what you need to see is, if you're on a losing streak, you need to see consistent wins before you can really, so you can pull yourself out of that before you start scaling up. Once we get this back to break even, I will start scaling up, and I'm expecting this curve to get a lot steeper, because as you can see here, with an 80% win rate, so we're using one contract throughout this month. When you use more than one contract, it's not like it doubles. If you know how to trade correctly and you're using ICT's concepts, it can be exponential, because what will happen is we will take one contract off at the first 5 handles, but then that second contract we can let run to like target liquidity pools. And so what that means is, it's not going to be you get, say, 250 for the first 5 handles, and then the next contract is another 250. It can be you get 250 for the first 5 handles, but maybe that next pool of liquidity is 10 handles past that. So then that second contract is going to go 5 handles plus 10, and it's going to be 15 handles on that last contract. And what we'll do is we'll move our stops to break even. So it'll be, we got the first 5 handles, we either get stopped out at break even, or we catch another 10 handles. So that's what it'll look like. But again, you don't want it. You should be sizing down when you're on a losing streak. So I went on a pretty long losing streak. Look how many trades this is. It's long. I'm pretty confident. I'd like to be confident in saying that I think this was due to just me not being used to live streaming. In the beginning of this channel, I felt like I had to always be talking. Unfortunately for you guys, I'm not the best entertainer, and I'm better at trading. So what that means is there's a lot of times in my live streams where I'm silent, and it'll just be 45 minutes of silence. Yes, sorry for you guys. But yeah, so I say all that to say that I got caught up in like kind of trying to entertain, trying to talk, trying to force trades because people were watching me. And once we started drawing down, I had to take a moment, pull myself out of it, because I was like, no, this isn't you. And then we had a great October. So I say all that to say, journaling is important because, well, part of me just wanted to flex our October hit rate, and just show you guys why it's important to zoom out. It's important to zoom out because when you're going through a losing streak like this, you can be like, shit, like maybe I'm not as good as I thought I am. And then you can go through a winning streak and you can be like, oh no, I am. I just needed time to let the model, let your skill and understanding trading just play out over a longer term. And then what's important is when you do go on winning streaks like this, to not let it get to your head. And that's why it's even more important to really follow your model, follow your rules, and stick to it. Trading being very systematic and very like, if this happens, I will do this, because you don't want to get too overconfident and start taking losses because you're taking on risks, or not respecting risk. Like this day right here, on the 31st, I knew I shouldn't have traded that month. We had 2 days left in the month, and I was like, I'm already proud of the hit rate. We're up on the month. There's no reason to take a trade. I logged on and I was live streaming, and the price action wasn't that great, and I just hopped in a trade that I knew wasn't the best, and we took a small loss. But again, I remember when I measured that out, I was like, even if we do lose, it's not like we're digging too much into the account, the monthly balance. So this was the October. This was our September. I'm excited for November. Again, I will make sure that when we do the November recap, that it's all pure data. That was all trades that were just taken on the YouTube channel. I'm excited because we are very close to getting the account back to break even. We're at 149, 232. And once we get it back to break even, I will start explaining how we are going to scale and start taking on using more contracts and working towards that 159. I think it's 159,000 to pass the Top Step Combine. So yeah, but just to reiterate again, this is how you need to manage risk and come out of a losing streak. It has to be slow. You have to prove consistency. Because if you're in a losing streak, you can't just try and over leverage your way out of it, because that's how you blow accounts. If you're in a losing streak, you don't know when your next winning trade is going to be. So, because you have to figure out and shake whatever is causing that losing streak. So you need to do small base hits to get back into a groove. And then once we get the account back to break even, we will start scaling more contracts. And yeah, I appreciate you guys taking the time to watch this video. I'm excited for November and what November is going to bring on this channel. I think once we start to get this account balance up, I think, the YouTube channel will take care of itself. So appreciate you guys. Let me know if there's any comments you have, anything you struggle with that you're curious as to how someone else might handle that. And I will be making another video kind of talking about it. So we just reached the end of our quarterly shift for ES, for the indices, just the quarterly shift in the market. And I will be making another video talking about how to project the next quarterly shift and kind of breaking down. It's a really good video. Actually, I'll give you a little insight to it. What I'll do is I'll break down the next quarterly shift and what our targets might be. And then I'm also going to kind of show you guys this market maker sell model that's been happening on the daily. And it ended right with our quarterly shift line. So that's awesome. That's cool. I think this right here is a beautiful depiction of just, ICT's concepts and how accurate and cohesive what he's made is. As you can see, the quarterly shift, our last one, ended just like 2 days after the top. And you can see that so the last quarterly shift was the sell side. The quarterly shift before that was a buy side. Quarterly shift, but that buy side delivery really started like right just like a week after that quarterly shift started. And then this quarterly shift, I think our next one is going to look a lot like this one. I know there's not a lot of data here, but see how this is kind of sideways. I think it's what it's going to look like, which means trading is going to be a little bit harder, but stay tuned for that video.